Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. We are on location today. I actually stepped out of the big room because, you get a bunch of cattlemen in a room talking. It's not very quiet. We are, of course, at the Nebraska Cattlemen's mid-year meeting taking place. A lot of optimism, Brad, seen amongst these cattle producers that are here. Many talking about some knee-high grass in the western part of the state, something they're not used to. But it's nice to hear some optimism and some big focus, especially over the struggles we've seen in this industry over the last couple of years. Well, we had a little bit of a struggle as you and I record this on a Thursday in this market trade, but every good day has got to have a speed bump once in a while. So I've mentioned him. Brad Kooima joins me. He is with Kooima Kooima Varilek out of Sioux Center, Iowa. And let's kick off. The way the market traded on Wednesday, little volatility going on in this trade.
That would be the understatement of the day. A little volatility, yeah, for sure. Susan, thanks for having me on, and good for you down there at that event. I was invited. Part of me wanted to go, but the markets have been a little whippy here too. A lot of great people down there. I know a lot of them. I'm sure that you're there. I know I went through that whole list of say hello to so and so and so and so. So,
yep, I took notes.
Yeah, do a lot of work with a lot of those guys. At the NCBA level. So, yeah, yesterday was so not to sound like a bad baseball interview, right? But one of the things, of course, the market, one of the common phrases here, okay, the market makes the low the day the news is the worst, market makes the high the day the news is the best. And obviously the news was pretty good this week. Cash market all-time highs, and sometimes I liken the market a little bit to a pop bottle rocket. You light it and you see how high it goes until it doesn't go any higher. And not to sound like I'm trying to come up with some lame excuse, but that just is kind of how it works. I felt like, I thought at the beginning of the week, it looked to me like you had that one day yesterday where for the first time you opened June cattle almost 300 points higher. That hasn't happened on this whole move. We gapped higher yesterday. It was the third gap up on this move. The April cattle did exactly the same thing. Third gap up, stalled out. You ran out of buying. You saw a big drop in the open interest. So I think what you had was a bunch of short covering guys that were short that threw in the towel. And when they were done buying, we had this big gap, this big lack of buying. Okay. And that's how you get those kind of volatile days like yesterday. And especially when you're as high as you are. Let's be realistic. You're talking about all-time levels. So the market does go down faster from that. So I do think a couple of comments. I do think that because we have leverage, because there seem to be a few less turn-in cattle, captive supply cattle, I do think that the cash market, Susan, in fact, the cash market today, it is better than it was Tuesday. Really, it is. There's cattle traded as high as 187 in Kansas just in a few minutes ago. So I look at June cattle at the steep discount that it is, and it makes sense to me. That's the only month that's still higher. And I would expect it might stay that way. Now, for the rest of the deal, at some point you make your spring high, and some point, brokers like me that are dumb enough to state their opinion will have to say it. So, and I think that's what happened yesterday. I think you maybe made the highs for now in the August and Octobers. I love your comment about the knee deep in grass because I still think that, that is key to the next cycle of heifer retention, etc. The female slaughter. And that still has me very, very optimistic for the end of the fourth quarter and the beginning of the fourth quarter of next year. But, maybe here when we get past the 4th of July, we might have to have a little pause for the cause.
So how long will June be undervalued? Or is that just something we're going to see, in the next week or so?
Well, I did a little bit of digging around here, numbers nerd that I am, to see how far has the relationship between June and August ever gotten to? Okay, so I went back years. I went all the way back to 1976 is the latest records I have. And the 1 year that stuck out as being the record year was 2017. And at that time, then we took June off at $7.40 over the August. We're at $6.42 right now. So I think you're going to get convergence, and it's going to be late. Maybe we won't quite get there, but you're going to get convergence on June cattle with the lowest or the worst market, which is the South. If they're at 83 to 85, and I just quoted you that little bit of a stick out sale at 87, it would seem to me like the June has got some room, and maybe you take that June August spread to an all-time record. Maybe you can get it 8 or 9 over the August, because I think there's going to be some selling after that technical reversal that we had yesterday.
You talk about this August, October, for example. We were talking about this before we started Cattle Call today, and you said this is why we call it the futures. I mean, we're trying to do a guesstimate of what we might see these markets at, 4-8 weeks down the road.
Well said. I've been frustrated with the futures market, the last while when we've gone through all these black swan events where it seems like the market lacks confidence and almost needs to have this proof before it can, get up and go. But you indeed said it right. We are August cattle are trading based on the idea that this is what we think the market's going to be. Please answer that. What it's going to be in the end of August. I apologize for that phone call.
No,
got a
good.
cattle buyer calling me. And the end of October, for instance. So I don't know. 173 August. Think about it. Okay, so let's say the market's 192 up here in Iowa, which I can get. Okay, I think I can get. That means the market has to go down $19 to get to August. Okay. Can it do that? Yeah, sure. But that's a big break. So, I don't want to leave the impression with your listeners and viewers that, Brad Kooima thinks the August cattle are going to break $20. I doubt it. Cash market maybe could. Maybe that means the August cattle breaks 3, 4, 5. But this discount is going to be much, much harder to make it break.
So as we get ready to wrap this up, were you surprised we saw cash take place as early as it did this week?
Very much so. Very unusual. And sometimes I wondered why everybody did it. It seemed like it was led by one of your wonderful regional packers out of Omaha, who without him, this market would be different. I mean, I tell you what, they do a great job of keeping everybody honest. I mean that.
Okay.
That's you go to Amarillo where there's one buyer. It's they act like they're so hot because they got all these big feed yards. I'll take my area every time where we got this competitive market structure, which is helped a lot by these small regional buyers, smaller.
Very much so.
That's why you're still seeing this active cash market yet today, because some of the big guys are still finding out, trying to get caught up and get their cattle bought for the week.
Well, that's kind of what I was going to ask you next. Is we've been hearing, and you and I talked about this, I think about 2-3 weeks ago, about the possible pullback coming from these packers.
Kill cuts.
Yeah.
You hear it. You hear it from one, but I haven't seen the evidence of it. Yeah. Yesterday we killed 124,000 again. I think the Packers got a conundrum. If he's going to really cut kill, I think he's worried about, sourcing labor is not an easy deal for any employer, let alone that job field. Coming out of COVID, it was hard to find enough people to help. And so if they're really going to go to 32 hours, I just don't know what that looks like economically for them. At some point later on, into the fourth quarter, beginning of the first quarter, they'll have to cut kill because there won't be enough cattle to go around. Right now, I don't know. I think they're going to try to figure out a way to limp their way by, maybe slow things down a little bit. But look at the boxes. The boxes are up another $3 at $3.28. Heck, they might be able to make a little money here yet. So I think they're looking at the other guy, hoping he cuts kill, and they don't have to.
All right, sounds good. Looking forward to catching up with you next week, see what these markets do.
Me too.
All right, joining us this week has been Brad Kooima. As we always remind you, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. From the mid-year meeting of the Nebraska cattlemen out in North Platte, Nebraska, this has been this week's Cattle Call on the Rural Radio Network.